Week ahead Fed to make important forecasts as stocks on precipice of breaking out. The Fed's meeting is the big deal for markets in the coming week, and it is widely expected to send a message that investors in both bonds and stocks could find bullish. But analysts in both markets say the Fed's message has been well telegraphed, and market response could be tepid or even a sell. The key for both markets will be what the economic data shows, after a series of weak reports. Thursday's regional The Fed is expected to hold interest rates steady, but it is also expected to issue a new forecast with fewer rate hikes and a slower economy. The Fed also stocks surged in the past week with the best performance since November for the S&P 500, which ended up 2.9%. At the same time, the fact that both markets are rising at the same time is somewhat unusual, and at some point the trend could break in favor of one market versus the other. An easier Federal Reserve, meaning one less inclined to drive up rates, is viewed as a positive for stocks because higher interest rates can slow the economy and send borrowing costs higher for companies and investors. Bond yields also The S&P 500 closed at 2,822, near the key 2,825 level, which is the upper end of a big band of resistance. But Paul Christopher, Wells Fargo Investment Institute Chief International Investment Strategist, said the stock market could actually have little reaction to the Fed because Fed officials have been very dovish in public comments. The Fed's actions could also already be priced into the bond market, according to George Goncalves, head of fixed income strategy at Nomura. He said, Economists see the Fed reducing its forecast for 2 rate hikes to 1 or even none for this year. They also expect the Fed is currently reducing its balance sheet by allowing securities to roll down as they mature, instead of replacing all of them as it previously did. The markets are also waiting to hear if the Fed will focus solely on Treasury securities, and at what part of the curve or duration. In the past it had Swang said she expects the Fed to continue to forecast 1 rate hike for this year. The Fed interest rate. Even so, she doesn't expect the Fed will actually raise rates, but it will continue to give itself flexibility. Economic data 8:30 a.m. Business leaders 10:00 a.m. NAHB FOMC begins 2-day meeting. 10:00 a.m. Factory order 2:00 p.m. Fed statement 2:30 p.m. Fed Chairman Jerome 8:30 a.m. Jobless claim 8:30 a.m. Philadelphia Fed 8:30 a.m. Q4 current at 10:00 a.m. Existing home sale 9:30 a.m. Atlanta Fed Prep 9:45 a.m. Manufacturing 9:45 a.m. Services PM 10:00 a.m. Wholesale trade